joining us on this special edition of Invest Africa for one of the most important stories in African business. I'm Nozi Pombandra. Now, Africa's private equity plays a pivotal role in harnessing Africa's economic growth potential. However, a joint study by the African Venture Capital Association and Ernst & Young has it that the continent's private equity industry is still at its infant stage. What efforts have been done to boost investor confidence and development in this space? Our team in Nigeria compiled us this report.
Private equity is a form of equity investment into private companies that are not listed on the stock exchange. It's a medium to long-term investment strategy that is characterized by active ownership. But private equity, or PE as it's known, is about more than just investing money. It works holistically to build better businesses by strengthening management expertise, delivering operational improvements, and helping companies to access new markets, including Africa.
Private equity is effectively growth capital. It's an investment that's cash into a privately held company, and you become aligned with the owner, the entrepreneur, about where you want to take that business, how you want to grow it. It's not a debt instrument, it's not terribly expensive, but it's really about helping an entrepreneur, a very smart one, grow and scale up a company. So I think it's a fantastic asset class, that can contribute to the development of African companies.
In comparison to more developed markets, African private equity is still a relatively new form of funding on the continent. And investors are seeing the potential our markets hold as an avenue to utilize PE.
You're seeing money go into agribusiness, and particularly into agricultural processing, which is a particular interest for us. You're seeing investment go into financial services, which is emerging throughout the world as the technology is changing things. So I think the incompleteness of the economic landscape in Africa is driving money in a number of areas that you wouldn't as typically see in non-frontier markets.
Tapping into the need to create awareness around the opportunities and potential PE provides for Africa is the African Private Equities and Venture Capital Association, known as AVCA. Private equity can play a significant role in boosting the continent's economy.
I don't think ultimately capitalism can work without private equity. In fact, I think it all begins with private equity. And it's only later in the life cycle of capital that you see it going into public equity and then into stock market listings and the rest of it. But the real heart and soul of capitalism usually begins with one man or a team of people putting capital down on the table to invest in an idea. And that's really what private equity is all about.
If harnessed properly, PE will not only help grow African businesses, but also directly impact on the development of the wider economy. The key to ensuring this happens is to continue the discussion and creating awareness around PE.
Joining me now in studio to discuss private equity in Africa is Erica van der Merwe, CEO at the South African Venture Capital Association, Alexandra M.A., Managing Director at Emerging Capital Partners Investments, and in our Nairobi studios, we're joined by Noni Wanjia. She's the CEO of the East African Venture Capital and Private Equity Association. And joining us from West Africa in Lagos is Dapo Akobadejo. He's an Africa Head of Transaction Advisory for Mergers and Acquisitions, this at KPMG. Thank you so much, everyone, for making the time to join us. Let's start off with a familiar face, Erica. Perhaps you can paint the landscape for us. What's driving this ferocious appetite for Africa by private equity investors?
I think it's the combined forces we've seen globally, the search for yields amongst institutional investors globally. So we're talking pension funds, endowments, family offices, fund of funds in general. So seeking those returns in a difficult financial market environment. At the same time, you're seeing the attractiveness of frontier markets such as those that we have in Africa, where there's a excess growth to be achieved in this market, and you're looking at a recognition of those opportunities.
Of course, we're always hearing about the population boom in Africa as perhaps being one of the draw cards. Alexandra, are we seeing that private equity is flowing towards assets that are facing consumers in particular set to benefit from this demographic boom?
Absolutely. The consumer story is a pretty fundamental one to what's driving investor interest in Africa today. And if you look at the types of investments that we at Emerging Capital Partners are making, we're absolutely following the consumer story. For example, 2 years ago, we invested in Nairobi Java House, which is the premier branded retail shop chain in East Africa. Over that time, since we invested, we've doubled the number of shops that Nairobi Java House has, and we've expanded into neighboring Uganda. Most recently, we invested in Atlas Bottling Company in Algeria, which is the exclusive bottler for Pepsi company. So we are absolutely looking at the investor story, the consumer story, and following where African consumers are going, whether we talk about the telecoms, financial services, or more specifically in the fast-moving consumer goods and retail space.
Noni, oftentimes when we're talking about private equity on the continent, there's a homogeneous approach. Do you think this is the right way to be looking at deal flow, or should we be having a more focused regional analysis? And most importantly, would that show different trends from what the blanket approach that's often used?
I think I would tend to agree with both Alexandra and Erica and say that certainly the consumer story can be looked at from the entire sort of continent. And I think in Africa, in East Africa as well, you might want to look at recent oil and gas discoveries, as well as the natural extractive sector, and also mining. These are key trends that are coming out here in East Africa as well.
Dapo, does that mirror what's happening in Nigeria in terms of the sectors that are attracting the most private equity?
I think one of the critical driving forces or attractiveness for private equity in Africa, in addition to the point already made, is also the very favorable demographics that we're seeing. You know, Africa has very young population, and we've also seen that in addition to that particular population, the rate of urbanization is so significant. And coupled with the consumer story, increased disposable income, and emergence of a very potent middle-class population, I think are the key drivers. In addition to the fact that we've seen a lot of African governments also implementing market reforms. You know, they're opening up sectors, and that's why key sectors that are very attractive are, first, the consumer sector. You know, given the disposable income and the huge market potentials in that particular sector. We're seeing that in Nigeria. Financial services, given the fact that, you know, the Central Bank of Nigeria has also implemented reforms successfully in banking and insurance. We're seeing a lot of interest there. We're seeing a lot of interest in utilities and power. And as you know, Nigeria recently, embarked on the most ambitious privatization of the power sector, where the incumbent utility company is now being unbundled and privatized. So we're seeing quite a lot of opportunities in that space. Also, in the oil and gas sector, given the implementation of what we call the local content and the change in the business model of the international oil companies, we're seeing that they're divesting the onshore assets to local indigenous players, and this also triggering quite a lot of transactions in that particular sector as well.
Alexandra, though, we always hear that Africa is a difficult market, or African markets are difficult places to do business. You've had an opportunity to work in different parts of the continent. How would you respond to that, and is that true?
Well, I think firstly, it's important to stop talking about Africa as a homogenous place, right? Africa has 54 countries. We at ECP have invested in across 44 of those countries over the last 14 years. And it's simply not the case that what's happening in West Africa is the same as what's happening in East, North, or South. There are very distinct demographics. There are very distinct underlying macroeconomic trends that impact the way in which business is done. And therefore, the risks are different. What I would say is that there are unique risks to investing in Africa, in West Africa, East, South, North, but that a lot of the risks are actually similar across private equity. The war for talent, right? Fundamentally, what we're looking for are great businesses with underlying fundamentals, but that have great management teams. And the war for talent, the search for great management teams, is something that private equity investors across the world face. So it's not unique to Africa. And I think part of improving investor understanding of private equity is to remove the sense that Africa is somehow unique. It really is about the same core fundamentals, which is what is the underlying business fundamental, what are the barriers to entry, why is this in a competitive advantage, or why does this business have competitive advantages, and how is the management team performing?
I see you nodding, Erica. So do you agree that it's really about looking at the fundamentals of the company and not so much about the broader risk patterns that are often attributed to the continent?
And I think that's true. If you look at the approach of private equity, it's very much a hands-on sort of micro-level approach rather than looking at the overall macro picture. It's looking at the individual opportunity from that company. What is it that that particular private equity fund manager can bring in? What efficiencies, what capital sort of growth plans can it impose or suggest to that company to ensure bigger growth? And also to add on to what Alex said about the regional story, what's interesting in the Rescura Africa-SAFCA survey on institutional perceptions that were released last week. Now this study showed that 70% of those institutional investors globally surveyed on Africa said that African private equity was more attractive than emerging market private equity in general. More than 70% expected it to outperform other emerging market private equity, and about 85% said in the next 2-3 years they will be upping their exposure to African private equity.
Dapo, let's talk about currency risks. To what extent do you think this is a deterrent to investors looking at African markets?
I mean, generally, when you take a look at the entire African story, I think that the real significant interest that we're seeing now is driven by a lot of those fundamentals that we've talking about before. But in addition to that, the huge celebration of emerging market is not, planning out to be such now, given the very slow growth that we're seeing in those emerging markets. And I think that's why people are turning into Africa, essentially. There are three key risks from a private equity standpoint that we see. The first one is the inconsistency in government policies. I think, if anything, if you want to encourage private capital or some sort of private equity fund or investment, consistency of government policy is very critical. Second thing is also the red tape in government and the high cost of doing business in most African countries. And the ability, for instance, of the private equity firms to be able to successfully expatriate their profits and dividends outside of the country in which they have invested. And I think the last point from a risk standpoint would also be the issue about management capacity. Oftentimes, the institutional strengthening of most organizations, which is the value that private equity firms had in form of ESGs, is there's a lack of very strong pool of management talent. And I think if you put all of that together as part of the value that private equity firms had, coupled with the challenges of exit, particularly with the issues with our capital markets, the liquidity of the markets, the enforcement of the rules and the regulations, and the fact that the market is not deep enough, So those are the major challenges that we see from a private equity standpoint.
Noni, let me throw that comment that Dapo's just made back to you. What has been the Kenyan experience in terms of trying to get investors to come on board despite the existing challenges that might exist in terms of an illiquid capital system? How are you working around it? How are you ensuring that the stock market is a valid entry or exit point for investors?
I would say that, first of all, given it is a very nascent industry, private equity in East Africa and in Kenya, what we're seeing nowadays is track record is deepening as fund managers are over their fundraising period and are now moving into their investing and also their growth of their companies. The more we see exits is going to increase LP confidence and hopefully help us to attract more and more LPs, not just from a DFI point of view, but also maybe local institutional investors or global institutional investors as well. But I think part of the problem or the challenge could be that the perception might be slightly different from the actual reality of investing on the ground.
Dapo, before I let you go, as you won't be joining us in the second half, let's get your quick reaction to that comment made by Noni, and also perhaps just talk to us about where do you see the prospects for private equity in Nigeria, and how do we enhance the environment to ensure that we get there?
I mean, I think the first thing, of course, is the implementation of market reforms. I think, in Nigeria, for instance, government has successfully reformed quite a lot of the key sectors, financial services, telecoms, the power sector, and the oil and gas is actually currently ongoing right now. So the consistency of implementation of those reforms, I think, is going to be very, very critical. Number two, is the issue about the value chain. You know, private equity strategy in itself actually tend to address this from the viewpoint of the fact that they tend to look for opportunities for roll-up or buy and build transactions to be able to create sizable businesses, which will be very attractive, either for strategics or to IPO in the later future when they are exiting the businesses. Thirdly is the basic macroeconomic fundamentals, and which is the biggest story about Africa's success, is the stability of macroeconomic economics of most of these African countries. You know, almost about 7 out of 10 fastest growing economies in the world are in Africa. So these strong fundamentals with respect to macroeconomics and the implementation of successful market reforms, I think are very, very critical to sustaining this huge tempo and momentum that we're seeing in terms of attraction of private equity into Africa, essentially, especially Nigeria. And for Nigeria, lastly, you know, the issue is all about scale. You know, with a market of about 170 million people, and with you know, a lot of these sectors that have been successfully reformed, the opportunities are significant. I mean, obviously there are key challenges, but I think it's either you look at those challenges as risks or you look at them as opportunities where private equity firms can exploit.
Well, on that note, we're going to go for a short break and we will be saying goodbye to Dapo. But we'll see you in 2 minutes. And when we come back, we pick up the conversation looking at the regulatory environment and what more can be done to attract even greater shares of private equity into the continent. See you in 2 minutes. Welcome back. You're still watching Invest Africa. Remember that we value your suggestions and your feedback, so please send us an email. That's to investafrica@abn360.com, or interact with us on Twitter using our handle @CNBC Africa and the hashtag InvestAfrica, following me @NoziPombandwa. Still with me, my guest, Erica van der Merwe, CEO at the South African Venture Capital Association, Alexandra Eme, Managing Director at Emerging Capital Partners Investments, and in our Nairobi studios, we're still joined by Noni Wanjia, CEO of the East African Venture Capital and Private Equity Association. And now in Lagos, we're joined by Nkiru Adiyokoya. She is the MD for Alternative Investments at FBN Capital Limited. Excuse me. We're now going to turn the conversation back to the point that we left off on. That was exit strategies. Erica, what are the most common exit strategies that we're seeing private equity investors choose when operating in Africa?
So the research that you referred to at the beginning of the show was the Africa EY exit study, and that shows that the most prevalent exit route is through trade sales. In other words, a private equity fund, if it were, say, in the retail industry, selling to an operator in the retail industry. So that's the most attractive, and it touches on the point from the previous segment. You referred to the capital markets being relatively underdeveloped in many African market regions. So the capital markets, the equity markets, not as developed, not as liquid. However, that also raises the point of the opportunity that it provides for private equity. So private equity being a good access point for institutional investors to African growth, a far better representation of the GDP composition of the various economies.
Nkiru, let me come to you now to introduce you into this conversation, and let's look at the regulatory environment, in particular because you're sitting in Nigeria, which is one of the markets that often comes under criticism for having a very laggard or slow regulatory environment that's not keeping up the pace with private equity investors. How do we improve on this?
Well, this is a constant area of development. At the recent African Venture Capital Association conference, which is taking place at the moment right now in Nigeria, the regulators were there present, and it's clear that there needs to be a lot of awareness building amongst all the stakeholders, particularly from the regulators. They are involved, and they have said we need to sing the story of private equity a bit more, particularly about the successes we've had. For them, a critical aspect where they need to get comfort is the track records of fund managers in Nigeria. So they want to see more visibility. They're getting more comfortable, and there are quite a number of initiatives that are going on at the moment to raise that awareness. So I think it's a process where we have to work together towards achieving that improvement in the entire environment.
Alexandra, from the perspective of an investor, what has been your experience in terms of the harmonization of regulatory frameworks, especially when an entity has the objective of operating in a regional context?
Sure, it's definitely been a challenge. I think it's improved over time. For example, the East African community, there's been a lot of work done across the different countries in East Africa, Kenya, Uganda, Tanzania, Rwanda, et cetera, to try to create an environment that is uniform in terms of its operations. That impacts private equity in a number of ways. For example, work permits. It's often the case that we have an operation in Nairobi that is expanding into Uganda, and initially we may need to have some Kenyan expatriates work in Uganda before we can set up those operations. So it's important for us to have work permits to allow our workers, employees to move seamlessly across the community. And that's an area where there have been challenges in the past. There is improvements being made there, but there have been challenges. You raised the point of currency earlier in the segment, and that's another area of potential challenges, and where harmonization and regulatory rules can help to assist private equity firms in that as well. And then finally, to the point of exits, that's also an area where regulators have a significant role to play. Most recently, we exited on the Tunisian Stock Exchange. In fact, our asset there was the largest IPO on the Tunisian Stock Exchange, and we fortunately at ECP have been around long enough that we have exited through a variety of mechanisms. But it's important for regulators to set the example to enable PE to use the stock exchanges as a viable mechanism for exit. And we've successfully been able to do that across both Nigeria, North Africa, and Southern Africa as well.
Noni, let's come to East Africa. When we talk about regional integration, this is the part of the continent that always comes to mind. The gains that the region has made in integration, are these translating into bigger deals coming through into the various countries in East Africa?
I think that given the speed at which the East African community is reforming, I think it'll certainly in the future have an impact on the kinds of deals we're seeing, and hopefully the speed at which deals are taking place. There are a lot of fund managers who might be Nairobi based but are now looking at some of the neighboring countries, so for example Tanzania and Rwanda and also Ethiopia as hotbeds of activity. And with time we'll see more and more deal activity taking place there. But I do certainly agree with Alexandra and say that these reforms that are taking place within the East African community are certainly helping investors.
Nkiru, let's look at who these investors are on the continent. To what extent are we seeing African companies or African investors investing in Africa themselves, or we're still seeing that a lot of private equity comes from outside the borders of the continent?
I believe it's a mix of both. Just speaking to a colleague earlier on at the conference, he was talking about some investments that have come in from, he's been able to sell off some of his investments that have come in from investors in South Africa and the eastern part of Africa. So we have, it's a cross between investments within the continent and also externally. We've had some instances where we've sold off investments to investors, funds from abroad, international GPs who have come in and established like a local office. So pretty much it's a mix between the two.
I guess I would just add to that and say that that's actually one of the most exciting developments in private equity today, which is inter-African investments, whether it's the Southern Africa, South Africa pension fund, which is investing very aggressively into the rest of the continent, including in Nigeria. They've made several investments over the last 18 months in Nigeria. That's very exciting. In addition, African sovereign wealth funds are now starting, they're creating sovereign wealth funds, different countries, and they're also starting to make significant investments, not only in infrastructure within their own countries, but also intra-regionally and across the continent. So I see this as a really strong and a positive development for the industry as a whole, as it creates a local demand for private equity to support that.
I've got a few seconds left, Erica. Do you think that the gains that we've seen in South Africa in terms of development of private equity could be used as a model into the rest of the continent?
Certainly, I agree. South Africa has had private equity for 25, 30 years, so it's very well established in this market with a strong private equity community advisory role and so on. And we're seeing South African private equity fund managers doing investments in the rest of the continent, but also encouraging their local portfolio companies to expand globally. So certainly that is a platform from which to grow and for other fund managers to learn lessons.
Well, we've come to the end of this week's episode of Invest Africa. Thanks again to all my guests. Bruce Whitfield is up next as he unpacks the latest news from South Africa's economy on Tonight with Bruce. Until next time, it's goodbye and thank you for joining us.